Your strategy doesn't have to be complicated for you to be profitable, and in this video I want to prove that to you. I struggled for 3 years where I wasn't profitable and I didn't know what I was doing wrong. And it's not because I didn't know what I was doing. I knew a lot, I just didn't know how to apply it. And I didn't know how to apply the right things that would make me profitable. And right now, in this video, I'm going to show you a whole month of backtest where I will share how simple you can keep a strategy, the main things that I focus on that make me profitable, and how you can do the same. So if you're tired of complexity, then let's do it. Every single day, what I do is very simple. I focus on the direction of the market. Where's the market more likely to head today? Because like this, I can position myself in the best way possible. Because let's say that I am bullish. What am I going to do? Am I going to short and then I'm going to long? No, I'm going to wait and I'm going to position myself in the best long possible. Because what happens is that a lot of traders, they know where the market is going. And if you don't, by the way, the first link in the description is for Master Trading Direction, which is a platform that I created with exercises and a whole free course for you to master direction. So if I am bullish, a lot of traders start to enter in the shorts because they think, oh no, the shorts are there, I swear. And then when they actually take the good winner, they have already taken the loss. So therefore this win is not maximized because it is just offsetting this loss or these losses. Or worse yet, you enter in 2 trades and then the market goes in your direction, but you've already taken 2 losses, and that's pretty much your risk management for the day. But right now we can see that the market is bullish. So what I'm going to do is I'm going to go to New York session, which is the only session that I trade. At 9:15 a.m. Eastern time, I ask myself, where's the market more likely to move? So 9:15 a.m. where I identify the key levels on the 1-hour chart and on the 15-minute chart to understand where's the market going to react from that is going to be bullish. And we can already see that there is a fair value gap right there that we are currently in, a fair value gap right here on the 1-hour chart. And I actually don't mark out the levels lower. Why? Because if the market goes all the way down, it's very likely to close bearish, and then the longs become lower probability. Now I go into the 15-minute chart and I do the same, but there isn't really much, so therefore I only stick to the 1-hour chart in this case. So now I go to 9:30 a.m. Eastern time. We have 9:30 a.m. Boom. Now I want to see a 5-minute engulfing. There you go. We have our 5-minute engulfing. Enter, stops below the low. Target at a 1 to 2 risk to reward right there. Let's see our target. Yep, it's pretty much at the extreme. I really like that. Just gonna place our order. I'm always going to do 1 contract. It's gonna be easier. So 1 contract, we're in. Then after a little bit, we have our final take profit. But yeah, higher time frame key levels, market reverses, and I enter, and that's it. Let's go into the next session. Okay, so we have 9 a.m. Let's go to 9:15. This is close to 9:15. Let's go to the 1-hour chart, do the same thing. We are already at the 1-hour order block. We can clearly see it right here. We are at the 1-hour order block. 15-minute is pretty clear. We also have this order block. It pretty much overlaps. I'm going to mark this out. It's pretty much the extreme right there. And now we just wait for 9:30 a.m. And last but not least, on the 5-minute, yeah, I'm going to mark out this extreme just as a last resort of the market moving aggressively from it. So let's see. 5-minute chart. I want to see 9:30 a.m. Okay, we had the sweep of the high. We have the move lower. Strong move higher. It didn't engulf right there. So I want to see now a massive reversal because we are already at those massive key levels. So I want to see reversal very soon. Okay, there we go. We have engulfed the move. Stops go below the low. Target is going to go at a 1 to 2. Place order, 1 contract. As the market moves higher, can already manage your stops, minus 0.5. If it breaks higher, I'll manage again to below this low. And this one was a loss. Minus 0.5. Let's go on to the next day. On the next day, let's go on to the daily chart, see how it is. So we already had a very big move lower on the daily chart. That is interesting. That can give us a little bit of a pullback. Let's go into the 4-hour. We see that the 4-hour is failing already multiple times, but we are at a massive 4-hour order block too. We're at a massive key level. Now the question is, in this one, I'm actually going to be a little bit more neutral because we could go higher, we could go lower. So let's see. Let's go into the 1-hour chart. What levels do we have? We have this fair value gap and this order block right here. Let's go into the 15-minute chart. We have this 15-minute order block that I would want to see the reaction from. So now it's more a point of letting the market just do its thing and you see in what direction you want to position yourself. So this is the open, we tap, move higher. Okay, we are starting to go back down, but again, we're still at that key level. Yeah, the market is just pretty much stuck between these levels right there. Okay, and then we do end up moving higher. Would this have been a position? Yes, but to be fair, I also don't need necessarily to go back just to add a position. That's completely fine. Then let's just say that that is a position missed for the day. Let's go on to the next one. Okay, let's go on to the daily chart. What do we see? Market is moving lower. It's already showing strong bearishness. We're seeing the 4-hour moving strongly bearish. Let's go into the 15-minute. We have the order block right here. On the 1 hour, that's going to be also an order block. We can even delete this one. This is not needed anymore. It's pretty much failing. So now let's see if the market reacts from anywhere around there. So what I'm looking for, very simple. Market to come back to our key levels, move lower, and then that push. Let's go to the open. We have the open. Now, if we go to the upside, start moving lower, I would be interested in the shorts. Okay. Okay, very, very nice. Let's do one. Sell, stop loss goes above the high. Take profit goes at the 1 to 2 risk to reward. Let's do this. 100 handle stop, 200 handle take profit. That was a quick one. Okay. Again, very, very simple. We look at what the 4 hours telling us. We look at what the 1 hour is telling us. We look at what the daily is telling us. And now we go on to the next day. Okay. What do we have? We have massive move to the downside. This is what happened yesterday. Could have gotten a 1 to 10 hour, because why not? But we can see market is at the extreme, is already giving us strong 4-hour bullishness. This is important to keep in mind. Like, that's a lot of strong bullishness. So I'm going to be very, very careful today. When we're looking at the daily is showing you bearishness, but at the same time, we cannot forget that we are a very strong key level in a very bullish chart. So let's see what the market tells us. We have an inverted fair value gap right there, paired with a fair value gap. Now we go on to the 15-minute chart, and what do we have? Just a massive order block here, really, nothing else. So order block, boom, and that's it. I'm not really looking for bearishness on this day because the 4-hour and the 1 hour are so bullish. So let's see. We have the market open, hasn't tapped any of the key levels. Now we have, okay, fair value gap just got inverted. Okay, now we get that confirmation. Very, very volatile charts. Target a 1 to 2 risk to reward. Okay, we can manage to minus 0.2. And that is a winning trade. Okay. And again, this is why it is important to understand that, especially on NASDAQ, when we're trying to forecast what the daily is more likely to do, the 4-hour and the 1 hour are incredibly important paired with the daily chart. And that's one of the things that I also talk about inside of Master Trading Directions. So again, first link in the description, you can check it out. Let's go on to the next day. On the next day, we can see that the market is already bullish. It's showing us that bullishness. It's getting very close to that daily fair value gap right there, which is something that I want to be very, very careful of. It's that we're super, super close to this daily fair value gap. So let's go on the 4-hour. We can see that it's still bullish, and we can go on the 1 hour and we can also see that it's still very, very bullish. We can mark this massive order block out. We have the 1 hour order block. Go into the 15-minute, mark out the key levels too. Let's go to 9:15 just so it's clearer. Finish the 9:15 candle. Okay, so we are already at a key level, by the way. We are already at a 15-minute order block. So I would actually rather, because we are very, very close to that daily fair value gap, meaning we've already tapped it, I'm more neutral. So at 10 a.m. I would short, or close to 9:30 a.m. I would long. So you have that nice move lower, strong move to the upside. This is going to be a massive stop if I enter. Okay. Target a 1 to 2 risk to reward. Similar trade, not as much manipulation. One contract, buy. Stop loss goes below the wick, else it is way too big. Target at a 1 to 2 risk to reward. Okay. Okay, that looks like a very, very quick loss. But now, tap the order block. Yeah, we pretty much were at the order block. But notice how the 1 hour is closed and we're pretty much just engulfed that 1 hour. So we could have that push lower that we were talking about because we are at the daily order block. So since we have engulfed the move, I'm going to enter in a short. Stop loss is going to be 150. That move lower is going to be towards the extreme. Exactly. That's always the perfect target, by the way. Oh, let me put a take profit and just missed it. There you go. Okay, so this is the power of being neutral on a day where you understand that the market is as likely to move higher and to move lower. This is where you then look for very, very key things in price on the 1 hour and on the 4 hour to actually give you that real bias. That's why I mentioned that if at 10 a.m. Eastern time we were to close bearish, I would actually be looking for the shorts. Okay, let's move on to the next session. Daily chart not looking good. 4 hour chart also not looking good at all. We are at the 4 hour order block right there. We are right now at that 4 hour order block. The 1 hour is also looking bearish. 15-minute, we're already at the key level. I don't even need to mark out more key levels. Now the thing that is missing is just for the market to open and give us some sort of bearishness after some bullish manipulation. There you go, market open, taps the order block. Already incredibly bearish. I just want a short, to be honest. The amount of bearishness on, oh my god, and that's a massive stop too. I'll go 150 again. Target is going to be at 1 to 2. I could target the extreme, but I'm just going to target a 1 to 2, especially with this sort of volatility. A strong reversal is always possible, so let's try this. And there was a very, very quick stop out. There you go. That's the risk of getting started there. And still looking for the shorts. But now we have even better manipulation, which is good. We don't grab liquidity, but that's fine for me. I just want extra confirmation that we're bearish. Okay, I want to see more. I want to see this 5-minute order block breaking at least. Yep, okay. Gonna short right there. 150. Target area 1 to 2. Boom. With 1. I always give myself 2 trades, by the way. Okay, there you go. Again, and this is the importance of, for example, having a bias, because if you didn't have a specific bias, I could have shorted, then longed, and I would have been wrong in both times. But for me, when I have a specific bias, especially when it's clear, for example, here, where the 4 hour and the daily chart are, oh my god, what happened there? Oh no, I can't believe it. What happened there? It was this trade. I didn't put a stop. Oh my god, I can't believe it. I was casually gonna get a $20,000 loss, because why not? I guess. So again, as I was mentioning, with having a clear bias, there's very few days where I'm actually neutral at the charts. And so like this, we had the manipulation, we have the move to the downside, I execute, I take a loss. I don't try to find a way to long. No, I actually find a way to position myself in the shorts again. So let's continue. Let's go on to the next session. Daily is still looking very, very bearish. We are at the daily order block. 4 hours showing some signs, but at the same time, we are at the order block right here. So I would be still looking for shorts. But the 1 hour actually looks very good to move to the upside. So on days where it's extremely conflicting, I would rather not trade, by the way. So let's see if before the market open, it remains conflicting. 9:30. Yeah, now the 4 hour is looking better, but the 1 hour doesn't look good because it's flat. Yeah, I'm just not going to trade this. I'm just going to go into the next day. Yeah, you can see. Eventually, it might go to the downside, but honestly, notice how we just avoided a range-bound day. Why? Because the market was conflicting. Right? This is the power of understanding direction and understanding how different time frames talk with each other, because like this, you are able to also know beforehand when a market is going to be low probability. So let's go on to the next one. So on the daily chart, very, very big reversal on the daily chart. So I'm for sure going to be bullish. Let me delete some things here. So I'm for sure going to be bullish. We can see that on the 4 hour, very, very nice. We have a 4 hour fair value gap, which we are currently in. 4 hour order blocks. We're already at the key levels that I want to see a reaction from. And I actually want to see a quick reaction. So let's see. Let's go. I want to see some bearishness followed by bullishness. Boom, bearishness. We have bullishness. Let's see it engulf. Boom. Okay. Bye. I'm gonna set entry here. Stops are gonna be 175. This is a very, very volatile market. Very volatile. So now I have to set my stops, take profits. Let's see. Okay. Oh, didn't tag me out. Can come back there. Managed to minus 0.5. Okay, that's not nice. You can manage again. This is what, 0.4? Can pretty much just exit the position. What, it's running 1.5 R? Yeah, it's running about 1.5 R. I'm just gonna exit the position here. It's getting close to market close. So that's 1.3. Let's go on to the next session. And notice how all of these trades are very simple. We find the direction of the market. We find the key levels we want to execute from. We wait for the 5 minutes to give us the confirmation. And we execute. That's literally it. Okay, we have 9 a.m. This was contract change. We're still very, very bullish. The 4 hour is also showing good bullishness. The 1 hour is also showing bullishness. So really, I'm only looking for longs. If the market starts moving down, I'm just not going to be interested. And that's one of the ways, by the way, that I'm able to have very short sessions, even when the market doesn't move according to me. So for example, a lot of people, what they try is that they actually try to, let's say the market goes against their bias. They're bullish and the market starts going to the downside. A lot of people are like, okay, now I just need to try to short. No, you don't. You can simply move on. Like you will notice you will be more profitable if you just move on when the market doesn't move according to your bias. So let's see what happens here. This is market open. We have that move higher, very big wick. I want the market to pull back to the key level and then go higher. Okay, it's just going without me. Yep, that's completely fine. That's completely fine. It keeps going, yes, but to be fair, especially on the 5 minute, I'm not really that interested in longing here, especially when we didn't have manipulation. So I'm fine just going on to the next session. Daily chart, our all-time high. Still looking for bullishness. 4 hour chart is showing some weakness, but there's still 1 hour in this 4 hour chart. So let's see. We are at the key level that I want to see a reaction from. We're at the key level on the 1 hour chart. By the way, notice how we still react out of the key level. Now on the 15 minute, we have the same thing. So still same key level, no need to overlap them. Like if you notice that the 15 minute and the 1 hour order block are pretty much the same thing, you don't need to put both of them. You might have the problem of having very cluttered charts that helps in your confusion. And so your goal is to reduce your confusion as much as possible. Okay, I'm gonna long here with one. Boom, stops, go below the low. Boom. I could have longed before because this engulfed these two candles. I'm just gonna do this. Boom. Target is gonna be a 1 to 2. Take profit is going to be, oh, that's what happened. Same thing that's gonna happen on this trade, I think. Yeah, there was a position underneath it. Okay, there you go. Now it makes sense. That's what happened on the previous trade. So we're in, and that's a very quick loss. Yep, that's completely fine. Some people will say, oh, you're longing at all-time high, to which I say, there's a reason as to why the market keeps going up and to the right, and that's because the all-time high keeps all-time highing. That's usually what I say. Let's go on to the next session. Because now, notice, some people would look at this and be like, okay, how can I short? I don't care. If the market is showing me bearishness, that's fine. It's like, okay, prove me wrong. I'll move on with my day. Because on the next day, this is where we can see it. We had a very strong move to the downside. We're already moving higher. So there is a strong possibility that we actually move lower on this specific day. And if we don't, again, we either trade or we don't trade. 1 hour chart. Okay, we're at the extreme. 15 minutes probably give us some better information. Gonna mark out the extreme on the 15 minute. Boom. 5 minute. This is the market open now. Boom, strong move to the downside, strong move to the downside. Now we're getting some bearishness because this just straight up moved to the downside. So we are at the 4 hour fair value gap, 1 hour extreme, 15 minute extreme. We are showing some bearishness. So we do this. Boom, stops go above the high. Target goes to 1 to 2. There you go, 100 handle stop, 200 handle take profit. Let's see. I'm actually going to be looking at the charts as we reach this extreme to possibly take profits. That would be about 1.5. That was very close to our stops. Let me put this here. That went to 1.5. Well, I wasn't on the 1 minute chart to actually look at what to do there. Well, that is a small loss. Again, in this case, 100% targeting the extreme was the way to go. This is what I usually do, but on this backtest, that wasn't really possible because it just wicked through. Let's go on to the next day. We ended up having that massive move to the downside. Now, what can we see? Massive move higher. Even before checking, I already know the 4 hour is bullish. Exactly, 4 hour is showing us that bullishness. The daily is still in an overall bullish trend, and it failed to close extremely bearish. So now what I'm looking for is 1 hour key level. We have one right here, and 15-minute, which is going to be the same right there. We can remove this. So now what I want, move to the downside, move higher, and then that move to the upside. Let's go to market open first. Okay, we have market open, move lower, engulfing, boom, enter, stops go below the low, target 1 to 2. That is good as a target, boom, and okay, let's see what would be 1 to 1.5, not reached yet. Put the stops here. And I'm gonna close it here. So basically, we can see that the market is very, very clearly, consistently showing us that it goes to key levels and it goes in line with our direction. So our goal is to understand direction first. That's what we gotta do. That's the one thing we have to master. It's direction. Because if you master direction, everything else will become easier as a side effect. You notice, out of all of these days, there was one day where I was neutral. That's it. All of the other ones, I had a clear direction. I knew exactly what I wanted to see getting tapped, where I wanted to see the market giving me the confirmation from, and where I wanted to execute. Let's see our stats. I can't delete these 2 trades that I left there without a stop loss that netted me $20,000. You guys saw what happened. But overall, what we can see is the consistency at which this strategy presents us in the market. And it's not unrealistic. It's not only giving you winners. It's a strategy that focuses on very specific concepts. And like that, it reduces as much confusion as possible. Because I've been the trader that as soon as the market opens, I get confused. And I overthinking exactly what I have to do. I don't know what I have to do. And that's the main issue. That's what might be keeping you unprofitable. Now, with that being said, if you want to see me trade and guide you on how you can become profitable, then check the second link in the description for funded trading blueprint. And I'll see you in the next one. Peace.